Welcome back. I'm Pratap here. Today is the 25th April 2024. So in this video, I would like to analyze Bank Nifty's daily high liquidity supply zone, because the stock is near the daily high liquidity supply zone. But before I get into this analysis, you should read the disclaimer. So in the NeoStock channel, we have the disclaimer at about section. Please read this disclaimer. I am not a SEBI registered analyst. All views and analysis posted in this channel are only for education and learning purpose. Viewers should take their financial advisors' assistance before making any buy or sell decision. So that means whatever the analysis I am doing, that is only for educational point of view. I am not suggesting you any buy or sell recommendations. This is the important point you all should understand. Okay, now prices are near to the daily supply zone. So where is the daily supply zone? Here we have a rally, 1, 2, 3, 4 base candles, and again a drop candle with hidden body. So let me draw the daily supply zone. So this is the daily high liquidity supply zone. So this is what we identified from our stocks near demand and supply zones in daily time frame. And this daily high liquidity supply zone you need to fine tune with 75 minutes, 15 minutes and 5 minutes. But with a curiosity, before getting into that analysis, with a curiosity, let me ask you a question. How many of you captured this entire move? So far, Bank Nifty has given 1700 points move in just 4 trading sessions. From where it started? From the fine-tuned 5 minutes demand zone. The move is started from fine-tuned 5 minutes demand zone. Where is that fine-tuned 5 minutes demand zone? Inside a 75 minutes high liquidity zone. That 75 minutes high liquidity zone is again in the daily zone. The daily is not a high liquidity. The daily zone is again in the weekly zone. Weekly is again overlapped with monthly zone. That means in this stock you can take MIT trade. Why MIT trade? The reason is your weekly trend is uptrend. Trend is in your favor. And price direction. Primary price direction we are trading against to that, because monthly prices did not reach into monthly zone. But prices entered into the weekly zone. So against the primary trend you can take a trade. That means weekly trend is, weekly price direction is in your favor. And apart from that, location is also in our favor. Location, that is curve. It is low on the curve. When all the factors are in your favor, you should not miss the trade. That's why such a big move it has given. The main reasons for this big move is all the parameters are in your favor. Most importantly, the 3 parameters, that is a trend, price direction, curve. Apart from these 3, there is one more powerful concept is also in our favor. What is that powerful concept? The 75 minutes high liquidity demand zone. Because inside here you have a 75 minutes high liquidity demand zone. Let me go to the 75 minutes time frame. See, here you have a 75 minutes high liquidity. Inside 75 minutes, again 15 minutes is also high liquidity. Inside 15, we have a fine-tuned 5 minutes demand zone. Let me go to the 5 minutes, fine-tuned 5 minutes demand zone. See, this is the fine-tuned 5 minutes demand zone. From here, the move has started. Actually, you can take a trade in 15 minutes zone itself. You need not wait till 5 minutes. Because when you are planning for MIT trade, either you would have taken your entry at either in the 75 minutes. If the risk is high, you would have taken at the 15 minutes level itself. But actually it went up to 5 minutes, picked up the orders, And see the move. Such a big move. 1700 points move in just 4 trading sessions. Okay, anyway, if you would have captured and if you would have learned supply demand zone price action concepts properly, especially lesson 11 to lesson 15, and lesson 16 is about fine tuning the zone. Sincerely, if you would have learned those concepts, definitely I am sure you would have taken this trade. And ultimately it has resulted a very good return. Okay, now let's go to the daily high liquidity supply zone. Inside I am going to the 75-minute zone. Are there any 75-minute zones? We have, see here, we have a rally candle. Again, this is also another rally candle with hidden gap. You get a huge body for this candle. This is the hidden zone. See, hidden zone concept. Actually, zone is not visible if you are seeing normally. All these are all looks like base candles. But if you apply the hidden body, this is a rally candle. Again, if you apply the hidden body, this is a drop candle. Such kind of zones institutions create, because the normal people are not aware of this concept. See, now you can draw a zone. Generally, you get a feel. Where is the leg in, where is the leg out? See, we have a leg in with the hidden body, rally candle. Actually, this is a rally candle, and this is a drop candle. With hidden body, this is a drop candle. But actually, these candles are looking like a base candles. That's why it is not easy for the people to recognize this zone. But you guys are already learned in lesson 9 itself. In lesson 9, part 3 and part 4, you learned about hidden body and hidden zones. Okay, let me change the color to 75 minutes color. So this is a 75 minutes supply zone. This is the fine-tuned supply zone inside the daily. Daily is inside the weekly, and daily is a high liquidity. And the same is also 125-minute zone. 125 also exactly the same zone, but 125 is a high liquidity zone again. But anyway, daily is a high liquidity zone. That is more than enough for us. And one more you can consider. See, this is a drop candle, right? You have one more, 1, 2, 3, 4 base candles. You can draw one more zone here. Or you can also consider this is good enough for considering your drop candle. That way also you can draw a zone like this. This is also another 75-minute zone. We have 2 75 minutes order flows are there. Now what you have to do inside this 75 minutes, you need to fine tune with 15 minutes time frame. So let's go to the 15 minutes time frame. See here you have a rally, 2 base candles and a drop candle, the 15 minutes. So let us draw a zone here. This is a 15 minutes zone, supply zone. Okay, we have one more 75-minute zone, right? So here also you can draw, you can consider this is the ERC candle, exactly that way. Or you can also consider this is, in case if you are not convinced with this is a drop, 1, 2, 3, 4, 5 base candles, again a drop candle. Exactly, this is the way also you can draw a zone. So this is a 15 minutes fine-tuned supply zone. But how do we know this zone will work or fail? If you identify an order flow inside 5 minutes, at least we have a guarantee. This zone is having an institutional order flow. Exactly here also. That is the reason why you need to plan your trade at 5 minutes. I mean, you need to fine tune at 5 minutes also. Intraday trade we will be planning at 5 minutes levels. See here we have excellent 5 minute zone. We have a rally candle, 2 base candles and a drop candle. So the dark color red, that is the 5 minute supply zone. So for clarity, let me write fine-tuned 5 minute zone. Some spelling mistake. This is the fine-tuned 5 minute zone. Because that is the area where you will be planning your trades. The fine-tuned 5 minute zone. That means 5 minutes zone is inside 15 minute supply zone. 15 minutes is inside 15 minute zone. 15 minute supply zone, and this 15 minute supply zone is inside 75 minute supply zone. This 75 is inside daily high liquidity supply zone. But we have one more order flow is also there. Check here, you have a rally, base and drop candle. This is our 5 minute zone. Which 5 minutes? So fine-tuned 5 minutes. This is again a fine-tuned 5 minute supply zone. Anything else? Because here we have a huge pro gap is there. Let us check how the candle structures here. If you can consider this as a leg in, but this base candle is having a huge wick. What you can do, sometimes you can compromise and draw the zone instead of in case. But this is a quite risky. The only reason is because there is a pro gap. If anybody wants to take a chance, if you have a fear that prices will not reach up to here, you can try one thing. Take an entry here. If this is violated, exit and then again pick up here. That way you can plan your trade. Those who don't want to take any additional risk, just ignore and directly in the fine-tuned 5 minute supply zone you can trade. That is also valid. See, because of these gaps, huge gaps in TradingView software, see how the candle structures are changed. Now let me hide this candle. Now see the candle structures. Look here now. Maybe this is a medium size candle, no doubt in that. But this is a ERC candle. That's why I have a concern about drawing a zone here. Drawing this zone, I have some concern. But one point we have to accept, there is a pro gap. Definitely this is a pro gap for 75 minutes time frame zone point of view. Go to the 75 minutes time frame. Where is it? Yeah. This is the 75 minute zone. For the 75 minutes point of view, this is a pro gap. Already it captured some of the orders in this pro gap. See, it entered into the pro gap yesterday, I think. And yesterday, see after that how pro gap pushed the prices. But the push is not great. The reason is demand is also strong. If the pro gap order flow is very strong, if all the orders are consumed, definitely this fine-tuned zone, a small zone, compromised and drawn this zone, 5 minute zone. In this area, definitely there could be some order flow will be there. But is there any good order flow? How do we know? So that's why going to use a technique. What is it? Because I am not comfortable with this candle. This is looking like a ERC candle. When you hide this drop candle with a hidden body. See, the moment you hide, see, the candle is looking like a ERC candle. This is looking like a medium size leg candle. But the moment you introduce this candle, all the candle structures are changed. All these candle structures are changed. I mean visibility is changed. So that is the reason why what I want to do, to check whether there is any order flow in this area, I am going to 1 minute time frame. Let me check in the 1 minute time frame if there is any 1 minute order flow is available. There is a 1 minute order flow, but this is not a convincing leg out candle. See, this is a rally candle. It picked up. There is some orders are here in this area. That's why again price came. Next day again it pushed. That is a different story. Because of the hidden gap, institutions added order flow there. But in this area, if prices reach, how strong it is going to hold? 1 minute leg out is not good. Anyway, don't take a trade, don't take a risk here. Do you want to draw rally base drop? But drop, it's not a great leg out. At least 1 minute, your leg out structure should be good. So because of these reasons, see here you have a very good structure. You have a rally, base, drop. See the entire move. See, this entire move is started from here. So definitely the 5 minutes fine-tuned area is a good one. No doubt in that. But here you want to compromise and draw, not really having a strong convincing reasons here. And moreover, see here earlier prices rejections came near to this and came down. So by considering all these things, better to avoid this zone, compromising the zone, whatever I want to draw, just I have withdrawn my thoughts. So let us stick to this. But there is a possibility. Prices come here and again it will come down. That possibility is also there. Reasons because of this pro gap is one area. Another reason is the location. What is the location? The weekly zone. He is having confluence with the daily zone. Daily zone is having confluence with 75-minute zones. So location is in our favor. But what is not in our favor? Maybe the trend may not be in your favor, but daily trend is sideways. Because it is sideways both long trades as well as short trades will be supported. But anyway, what we are planning is not a intraday related trade analysis, right? You want to do, what you are not doing is not related to MIT or DIT related trades or WIT trades. You are planning HLQ trade setup. Because the daily zone is the HLQ zone. Whatever the setup we prepared, that is the HLQ setup. And whatever the analysis is you are doing is for intraday point of view. Probably your target could be 15 minutes target during the intraday. But remember, this is the immediately available fine-tuned 5-minute supply zone. If this is violated, this is the next one. You have two trade opportunities. HLQ trade opportunities I am talking about. And if anybody wants to take for delivery, that means you want to hold for some few days. Please remember the trend is daily is sideways. Definitely 75 minutes trend is uptrend, no doubt in that. Because now prices see the big move. Definitely it would have violated several 75 minute supply zones. only daily trend is sideways. Because of the daily trend is sideways, maybe WIT trades can be taken for a sideways setup. WIT trade, short trades can take for sideways setup. That means your entry is on 75, exit also should be on 75 minutes demand zone. That way you can plan a sideways setup. So far we haven't discussed about sideways setups. Probably in this advanced phase 3 training at some point of time I will explain that. So far we discussed only bullish and bearish trade setups. Between lesson 11 and lesson 15 we discussed bullish and bearish trade setups. Okay, anyway, we have completed the fine tuning. Whatever the fine tuning I am showing you, not for your trades point of view. Please remember, this is only for educational point of view. Those who have completed lesson 16, fine tuning the zone, these are all the good examples for you. Please understand. Hope this information might be, I am shifting to 5 minutes time frame and show you the final picture. So this is the 5 minutes picture. Here you have one order flow and here again we have another order flow. And this, because it is a HLQ zone, the short term trade opportunities will be provided to you. But how do you plan your trades in case if you want to take a trade? You have to do, you should look for RR, you should also look for where to plan your entry, and mostly 15 minutes supply zone, demand zone, 15 minutes demand zone should be your exit point. Because HLQ trades will reach the target up to 15 minute zones. But you can also use some trailing related concepts. You can mix like 1 minute trailing stop or 5 minutes trailing stop to capture the maximum moves. If market is reversed, in case you don't want to get any losses, such kind of strategies you can apply. Based on all these things, you can prepare your plan. So you need to understand where, see, it is your, you have to take a decision. I am not telling you what is the entry, what is the exit, because I don't have the authorization. Because I clearly explained you in the disclaimer. I just shown you only how to fine tune. And also one more point you should observe, RR should be strictly you have to follow when you are planning the trades. Without following the RR, if you are planning, it disturbs your investments. So never trade against the risk management what you land in supply demand zone price action. Okay, best wishes to all the members who are doing trading based on your own analysis. So let me take a break here and we'll continue from here in our next video. Thank you.